Okay, good morning, everyone, and welcome to this morning's event. You're very welcome along. My name is Mark Tobin, the founder of Coffee Microcaps, for anybody who's joining us for the first time. This is a specialist appendix 4C results wrap, slightly different from our weekly Coffee Microcaps morning meeting, primarily focused on companies who have reported their 4Cs either today or in the last week or so. I'd like to give a special mention to DMX Asset Management, our sponsor for our virtual events, who help to keep these free for attendees. A quick compliance and disclaimer slide. For anybody who's joining us for the first time, the companies we normally have on here capped under 300 million in revenue and approaching cash flow break even, or indeed are already profitable, generally from outside the resources and biotech sectors, what I like to call industrial microcaps, which is a catch-all for microcap technology, financial services, healthcare, whatever falls into that group outside of resources and biotech. Structured this morning's webinar, each company's got a 30-minute slot. We've got 4 presenting, so it's going to be a 2-hour event this morning. We break that 30 minutes into a 20-minute preso, 10 minutes of Q&A. If you do have any questions for our presenter, please type them in the Q&A box rather than the chat function, and I will moderate the questions to our presenter at the end. Please note the webinar is being recorded, and it'll be up on the Coffee Microcaps YouTube channel first thing on Monday morning. You can follow us on all the socials, Twitter, YouTube, as I said, for the recording of this webinar, indeed all the previous ones. We've got about 70 previous events on the YouTube channel now at this stage. First up, we're going to hear from X2M Connect. We've got the CEO, Mohan, Jesudason, with us. After that, then we've got Brendan Malone coming back to give us an update from Raiz Invest. Then we've got another first-time presenter, Ivanchenko from CV1. And then finally, another first-time presenter, we'll have Blair, Norfolk from BIOME, Australia. So without further ado, I am going to stop sharing my screen. And Mohan, if you can start sharing yours, I'll let you know when I can see the cover slide now. Yeah, I can see the cover slide now, Mohan. You're good to go.
Thanks, Mark, and good morning. Good morning, everyone, and thank you for joining us on this Friday morning. My name is Mohan Jesudason. I'm the CEO of X2M Connect Limited, a listed ASX company. I've been running this company and its predecessor since about 2013. Prior to this, just a couple of points about myself. Prior to this, I was managing director of the gaming and lotteries company for Tabcorp for a decade, and before that, I had a decade with Telecom New Zealand, where I set up and ran their mobiles company. Today, I'm here to talk to you about X2M Connect. I'm going to talk about our quarter's results. Importantly, I'll talk about what we actually do and what makes us different in the marketplace. With that, there is a disclaimer. You'll find that this presentation posted on our website. You're encouraged to read that. The high-level numbers for us for the quarter, look, we've had a very good quarter. We've continued on the momentum that we've seen now for about 18 months. Revenues were up 68% on Q3 on PCP. Year to date, we're up 49%. We are expecting the quarter's momentum to continue for the remainder of this year. Total revenues for the 9 months so far about 6.1 million, and that's in excess of last year's full year number of 5.7 million. Importantly, contracts that we have already secured and purchase orders that we've already secured, but haven't recognized revenues as yet, accounts for a further 3.8 million. So that gives us quite a good trajectory when you look at the next few quarters. We're a B2B company working in the APAC region, targeting utilities. We have 44 enterprise and government customers from South Korea, Japan, Taiwan, and Australia. Importantly, those customers represent an addressable market of 25 million households, and every quarter we have been seeing steady growth in our enterprise and government customer base. Our business, as you will soon see, is connecting devices over the internet, the next evolution of the internet. We have from our 44 enterprise and customer group, we have now got about 196,000 devices. You can read homes to that connected on our platform, and that's up 87% year on year. The performance over the last quarter wasn't a one-off, and what this graph shows you is performance over the last 3 years. So year-to-date revenues, you'll see, have had steady growth since 2020. Connected devices, likewise, 53, almost 54,000 in Q3 FY20, up to 196,000 at the end of the last quarter. So, which is really, really strong growth, and in the markets that we're in, stronger growth than we believe most of our competitors. And you'll see our enterprise and customer base has more than doubled from FY20 to FY22. So this is what we do. We are playing a role in the digitization of utilities in the APAC region. And to give you an example, in South Korea, we monitor water for 19 municipalities in that country. We've got over 80,000 households connected onto our platform. Water meters in South Korea in a pit underground, about a meter underground, which the temperature ranges from -20 to +40. And those pits fill up with water. Snakes hibernate in them during the wintertime. Meter reading, therefore, is inaccurate because meter readers won't lift the lid to read the meter. They're losing about 20% of billable water to undetected leaks. We put our little chip into that meter. We're a software company. Our platform then takes control of that meter. So we collect information and data. We automate meter reading. We detect leaks. We can go back and remotely shut down a household or a meter if there is a leak. We provide the customer the opportunity to add other upstream devices like water quality sensors. And in South Korea, if you're over 80 and living on your own, you're on the local municipality's social welfare register. And if you don't use water to a predetermined pattern, that sends off an alert, and social welfare will ring you. And if you don't answer the phone, the police will come around and check on you. And over the last 3 years, we've had about 200 cases of elderly and disabled people needing help that we've discovered through our technology. A highly sophisticated country from a technology perspective, and one where we have broken very good ground and where we are the market leader. Our existing customer base in South Korea, the 19 municipalities, represents an addressable market of 3.5 million households. In Japan doesn't have natural gas. About 50% of households, 24 million households, are on bottled gas. So if Mark runs out of gas today, the truck will turn up and replace his gas bottle. And if his neighbor runs out tomorrow, the truck will be back there with another gas bottle. And what we do is we collect information and data. We can predict who's going to run out when, and we provide the logistics management for one of Japan's largest gas meter manufacturers, Asbel Kimon. The net result of this has been that kilometers traveled have dropped by 29%. Delivery days have gone from 6 to 5. Delivery fleets dropped by 20%, and overall OPEX down by 20%. We have Asbel have over 150 gas retailers on our platform, and they have just hit 115,000 households on our platform. And again, a very compelling business case. The Japan model is an attractive model for us because it's a licensing model. The customer does all the work. They do the manufacturing, installation, sales, and we get a SaaS-based revenue of 13.7 cents per meter per month for the life of the gas bottle, which is on a 3x3 contract. Our next market entry and what we rolled out in Taiwan is in the space of energy management. As most countries are doing today, Taiwan is focused on net zero. Taiwan government owns a innovation company called ETC, the Electronic Testing Center. They rolled out the toll road system in Taiwan. We won the mandate through a competitive tender to fit out their first smart government building. And this is one that's got solar, one where all refrigeration, air conditioners, etc., are connected onto our platform. The focus is on reducing total energy consumption, then increasing the level of renewables, reducing carbon emissions, and then measuring the reduction in carbon emissions, and over time enabling the customer to monetize carbon credits. This was deployed last year and will form the basis of our next market entry, which will be the Australian market. What makes X2M's technology different to what else you might see in the marketplace? Firstly, we can take dumb devices, analog devices that can't communicate, or digital devices that can't communicate, and make them smart and make them communication capable. And importantly, we can go back and control that device. We can put any device onto the one platform. And the ability for one device, say a smoke sensor, to talk to a gas meter and turn it off when there's smoke in the room is our patent. Similarly, a solar panel sending energy into a battery that in turn goes and turns off an air conditioning system to conserve energy and those communication protocols is our patent. We can operate across any radio network, so 3G, 4G, 5G, so our customer doesn't have to take bets on what technology is going to prevail in the future. We can operate in the cloud or at the edge of the cloud, or what Cisco calls a FOB. That means we can have centralized commands, such as billing, for example. It also means that because we operate at the edge, in the event of, say, an earthquake, if telecommunications and power is lost, we can continue to operate. It also allows us to build highly scalable platforms and networks at a very, very low cost. So we tend to win the cost battle more often than not. We have very little competition in the markets that we're in today. And indeed, in the period since 2013, we have never lost a customer. Our strategy is a land grab. So secure as many enterprise and government customers. We lead with hardware. We're not a hardware company, it's a commodity product. We have partners who provide that hardware, connect them onto the platform, and from that we generate SaaS-based revenue stream. Our program has been a three-horizon program. Stage one has been commercializing our business, investing in markets, building our brand, establishing channels to market. That's well and truly done and behind us. We're now in stage two, where we're scaling up the business, and as I said, we've got 44 enterprise and government customers, addressable market of 25 million households, 196 already on the platform, and that positions us very well as we move into stage three, which is building our SaaS-based business. 5 core pillars to our strategy. One is we have got, in each of the markets that we're in, we have a leadership position, and we're about securing that and making sure that there's daylight between us and the number 2 player. Why? Because it gives us very different economics, being the market leader. We will expand into compatible markets. So we have just won mandates, for example, in battery monitoring, and I've already spoken about the deployment of energy management in Taiwan, and we'll be looking to bring that into the Australian marketplace. We are highly focused on growing our SaaS business. So every device that comes onto our platform has an obligation for a minimum 12 months SaaS-based revenues, and in that 12 months, we negotiate new contracts to extend that for 3, 5, or 8 years. You will see us expanding into new geographies in the next 12 months, and our key target is the Australian market, where we already have 2 microgrids deployed at Cape Jarvis in South Australia for South Australia Power, in Mooroolbark here in Victoria for AusNet, and we'll be looking to take that into the residential sector through a couple of major developers, and finally, we're focused on ensuring that each of the operations countries that we're in, that cash burn continues to reduce as it has, and we turn those operations into profit. The outlook for us, we believe, is strong. The fundamentals are all in place. We have now had a good 6 quarters of really strong revenue growth. As I said, last quarter was up 68% year on year. We've already generated more revenues in the 9 months than all of last year. The customer base that we've got, they've made the strategic decision to digitize utilities, to digitize water, electricity, or gas. And once they've started on that path, you tend to get repeat orders coming through really every couple of weeks. And finally, Mark, to your audience, we think that X2M represents a very good investment proposition. It's a company that's doing what it said it would do. It has delivered strong growth. It's got a very good pipeline of enterprise and government customers, and there is a strong news flow ahead for the next 2 or 3 quarters. And I'll pause at that point and take questions.
Thanks, Mohan. Do you just want to maybe move to the next slide that has the contact details, and we'll just leave that up? Yeah, we'll just leave that up for the Q&A if anybody wants to make a note of it. We've got one question already from the audience. I think maybe a bit of a historical background. A question about Freestyle Energy or technology. I'm not sure if that was a competitor to X2M or a previous incarnation / business you acquired.
Yes, X2M acquired the assets of Freestyle Technology. Freestyle Technology was established about 2006. Macquarie Capital had management control of this company from 2013 to about 2017 or 18. They had the ability to the right to appoint the CEO and the management team, and that's how I ended up here. And Freestyle Technology, the major shareholders, liquidated that company. From a good cross section of shareholders believed very strongly in the technology, in the progress that had been made, in the management team and the patents, and acquired the assets in January of 2020. And the business and basically cleaned the business up, tidied it up, and the business has gone from strength to strength.
Okay, great. Then one from me. Obviously, we've heard a lot over the last, basically since the start of COVID, about chip shortages and semiconductor shortages. Has that impacted? I know you've had very high growth over the last 3 years. I'm just wondering, has it impacted at all, or has it not really been a concern in terms of rolling out contracts that you've won?
Look, it's always been a concern to the extent that it's real. It hasn't impacted our operations. We did 2 things. One is we stocked up with semiconductors, and the other is that we also released lower cost and simplified semiconductors that attach to meters primarily. The chip shortage could have had 2 impacts. One is just not having them, and therefore you can't roll out. So we solve for that through by building up stocks, as I said. The other is that normally you would expect the price of component parts in this sector to come down over time. And of course, when there's a shortage, prices don't come down. So we solve for that by simplifying our product design. So while globally the shortage was real, it didn't have an impact on us.
Okay. And then can you just...
And indeed, currently we're rolling out to about 40,000 households in South Korea, and that won't slow down, for lack of spare parts.
Okay. And in terms of how the contracts looked for these types of customers, is it, I think you referenced it, is it 3 year with a 3 year option to renew? And I'm just wondering then, do the customers pay on a monthly basis, or is it an annual fee, or how does the revenue kind of structure look for most of your contracts?
Look, very good question, Mark. So firstly, our revenue model is that if you buy our hardware, we get a hardware fee. You're not obligated to buy our hardware. In fact, you can bring your own, or if you want to manufacture it, we'll give you the reference designs to go on and manufacture it. If you bring your own, we will charge you an upfront fee when you come onto the platform, and then there is a monthly SaaS-based fee, and that ranges from 10 cents a month in the case of gas in Taiwan to $6 a month for pressure sensors, and in Korea for water it's about 40 cents a month. And the actual charge varies depending on the quantum and frequency of data that's collected. We average out at about 28 cents per device per month.
That's across 28, that's across kind of all of the regions. If you blend them across, it's about 28 cents.
Yeah, the blended average would be about 28 cents per device. And over time, you'd expect that number to go up because customers, as they get more and more information, their thirst for data actually just only goes up. Contracts, so when a device comes onto the platform, there is an obligation to have to take data for at least 12 months. So we build that straight up front. And in that 12-month period, we will negotiate a contract which will be for 3 or 5 or 8 years with the customer for the collection of data, and they almost have to enter into that contract because if they don't, then things like billing functionality is lost. So typically a municipality has made the decision to do away with manual meter readers, for example, and adopt our technology. So there's a requirement for them to adopt this technology. The business itself is very sticky. Once you've come onto the platform, it becomes very expensive to actually change providers because you've got to swap out all your front-end hardware, and it becomes very expensive to have a second supplier alongside us because you end up duplicating everything.
Just a question from the audience. I think you're on just shy of 200,000 devices connected currently. Do you have an idea of how many you need to kind of hit break even? Is it somewhere around the 300,000-400,000, or is it kind of also a function of which market it might appear in and whether they take hardware sales as part of that?
Look, we would expect that once we get to between 400,000 and 500,000 devices, then you would be starting to break even.
Okay, perfect. And in terms of competitors in this space, are you up against I know you referenced them in the presentation. Are you up against the likes of Cisco or Schneider Electrical, or who are the main players, I guess, that you're going, if there's a tender for a municipality in South Korea, who else is trying to get in this market? Because as you say, if it's very expensive to substitute or change down the line, Yeah, I'm guessing there's a lot of people who, you know, want to kind of, yeah, be that company who is the kind of preferred bidder.
Yeah, you don't see the likes of any of the large technology companies, by and large, but I'll come back to that. So most in all our markets, the competitors would be new small players, who operate in this space, and there's very few of scale that we come across. The exception to that was in Japan, our business is a licensing business where we're the Intel inside, if you like, for one of Japan's largest meter manufacturers, which is ASBIL Kimon. That contract was secured in early 2020. There was 3 years of work prior to that in terms of getting into their labs and proving our technology, et cetera, et cetera. In the end, the customer went to a public tender, and there were two that were down selected. There was us and Hitachi, and Hitachi were the technology provider to ASBIL Kimon for 30 years, and we won the mandate.
Okay, great. And then final question, if we just the expansion into Australia, you referenced the two projects you've up and running, which are with the, you know, the kind of energy retailers. Is there a plan to, you know, replicate in South Korea, where you're going to try and get into the local council market, or even maybe at the state government level, or is it more focused on the energy retailers and getting involved with the big property developers, you know, right at the development stage, and you're kind of part of the whole project delivery?
There are two markets in Australia that are of interest to us, and that we believe will open up in the near term, and they are in energy management, in the in the residential and commercial sectors. So these are property developers who are building 1,000, 2,000 household, you know, have 1,000, 2,000 household subdivisions, and increasingly they are focused on sustainable housing, smart communities, increased use of solar, increased use of renewables, and of course we have got a proven technology and proven solution both here and in Taiwan, and that's a market that is of interest to us. And the other is water digitization. We think that we'll go to another level, and I think we think that over the next couple of years that we'll see activity there. That a real near-term opportunity is in the energy management space.
Okay, great. Let me just check here. We got any others? And in terms of the, I guess, sales cycle, dealing with these kind of government tenders and contracts and bids, I'm guessing it's pretty long. But can you give us a sense of the sales cycle, and then from awarding to kind of maybe like a full deployment where you're getting that monthly revenue, you know, the kind of install period afterwards? Like how long should we think, if we see announcements, you know, of bids won, you know, how long before that actually translates into that kind of fully connected device, fully kind of monthly billing?
Yeah, so again, Mark, a very good question. So enterprise sales, whether it be in this space or if you're at Telstra, enterprise sales generally takes a good 12 months. And I've been in this sector for many years, and no matter you know where you look and what country you look at, you know, there's not much deviation from that. We're in a very good position because we've built a extensive prospect pipeline over the last 2 to 3 years, and we're now in conversion mode. So you know, there isn't a month that would go past without a new contract being secured. Yeah, so we don't have that hiatus. the sales cycle almost acts for us as a barrier to entry, to the extent that if you're new and coming into the Korean market, you've got to go through that 10-12 month process. Once you win a contract, deployments, we don't do it. We don't do the deployments. The municipalities and the utilities have their own deployment people. That's pretty quick. So the municipality of Gochang, we won the mandate to deploy our technology to 25,000 households. At the time, it was 24,000. The number's actually grown. We completed that deployment in something like 4 months from start to finish, and your revenue starts immediately. You deploy. In Korea, we are a recognized supplier to the government, and we have what's known as the Certificate of Performance Excellence, which is quite a process you've got to go through to get that. That means that we're on a government procurement website, so municipalities can go online and click and collect effectively, so we can get into the replacement cycle. It also means that from a payments point of view, we can get paid as much as 70% of a contract upfront. So it's a long way to answer your question. Long sales cycles, short for us because we've already built a pipeline and we're in conversion mode. And the order process is actually pretty swift because we're getting now regular repeat orders from our customer base.
Okay. Mohan, we'll leave it there. We're just up on time. We've gone slightly over. Thank you very much for giving us an overview of X2M this morning. And yeah, if anybody's got any further questions, please reach out to the contact details there. Mohan, if I could ask you to stop sharing your screen, because I know we have...
Thank you, everyone.
Thanks, man. I know we have Brendan Malone, joint group CEO of Raiz, waiting patiently in the wings. Brendan, if you want to start sharing your screen, I'll let you know when I can see it coming through. Yeah, it's coming through now. Okay, I can see the 4C now, Brendan.
Perfect. And you can hear me, Mark?
Yeah, maybe just move a slight bit closer to the mic or the laptop. You're a little bit low.
How does that sound?
Yeah, that's better.
Lovely. Take it away.
Yep, take it away.
Great to be here again on Coffee Microcaps session this morning, and it's I'm very happy to actually see the sun shining up here in Sydney this morning. I had the pleasure of joining Mark with George back on the 30th of July for one of these sessions, and I'm very pleased to say that we have grown and with great momentum, and we continue to move forward. I just thought for anyone that has not heard about Raiz Invest Limited before, to give a quick summary of it. The Raiz app was first introduced to the Australian market in 2016 with following a partnership or a joint venture with the Acorns company, Acorns Grow Inc. The concept of being able to save and invest virtual loose change had instant appeal here with the Aussie market. Over that period since 2016, we've had more than 1.3 million downloads in Australia of the app, and have helped over 580,000 Aussies save, invest, and provide them with some sort of financial education. At the start, Raiz was set up to enable customers to invest their virtual loose change, the modern day equivalent of the old piggy bank or the ashtray or even the glass jar at the front door. Today, we are so much more than that, with customers now able to choose from a multitude of products, services, and investment options. Our underlying investments are made up of what we call portfolios, and they are predefined, especially the first 7 of them. They are a mixture of ETFs, all quoted here on the Aussie exchange. We have the 7th portfolio is an Emerald portfolio, which has a social responsible theme. We have a portfolio called Sapphire, which I actually really enjoy from an education experience point of view, as it has a 5% allocation to Bitcoin and hardcore Bitcoin, not a derivative of. And what that does is give users an experience in a controlled environment of some exposure to a crypto such as Bitcoin. We also have a customized portfolio where not only are those 9 ETFs that are in the predefined portfolios, we have 16 ETFs plus Bitcoin, and the customer can weight or asset weight their own portfolio. The Raiz app, as I said, has had over 1.3 million downloads, and it's available in the Google Play Store, the Apple Store, but it's also available for the web app as well. Raiz pioneered the roundup function for loose change in Australia. Today, we're known for more than that. Just to name a few, we have a superannuation product, one called Raiz Invest Super, and one also called Super Estate Super, which was an acquisition, or our first acquisition last year on the 27th of July. We have the Emerald and the Sapphire portfolios that I mentioned. One's social responsible, and the other one's got an allocation to Bitcoin. We have Raiz Kids, which I'm very pleased to announce. The Raiz Kids 2.0 was released yesterday, and we're getting some very positive feedback from that. We also last year introduced what we call Raiz Home Ownership to provide an actual person to speak to assist young Australians or any Australians in either buying their first home, refinancing, or a second mortgage or investment property. We also have the ability now, after 5 years, to onboard self-managed super funds. The Raiz app was previously only available to individuals in Australia. And as mentioned last year, with pretty high take-up, has been the customised portfolios that can help people on their investment and education journey. I think the first question, and Mark and I spoke about this yesterday, is like, what is the actual opportunity? With the hands-on experience that the Raiz product provides, it's so important for financial education, literacy, and also financial inclusion. For this reason, we are rapidly scaling in our target markets that we outlined in our prospectus 4 years ago. We set a strategy, and we haven't altered from that. With live operations and products in Australia, Indonesia, and Malaysia, a beta version of the app is being finalised in Thailand, and Vietnam is close on our radar. Raiz is going to be the product of choice for the financially minded masses across the Southeast Asia market. With a combined population over 500 million across these target markets, the opportunity is large. The foundations we have set up across the region, the revenue models that are being based on the number of users, our low-cost product offering that breaks down the barriers to all users to start their investing, savings, and investment behaviour. The opportunity identified by the board and the management is significant, and guess what? We've only just started. Our expansion plan is diverse, with continued focus in growing the Australian business whilst executing the Southeast Asian growth strategy. We have a proven track record which continues to improve. In short, increasing territories, customers, and products to maximise our growth. Knowing the business and revenue models, and if we look at the population of the countries we're operating in, with Australia has a population of 26 million, we currently have around 292,000 active customers. Indonesia, 277 million population, and we have around 230,000 active customers. And Malaysia's got a population of about 33 million, and we have 104 active customers currently in Malaysia. Then we're targeted Thailand and Vietnam. Thailand's got a population of circa 70 million, and Vietnam has about 98 million. So as I said, it's over 500 million people across our geographies is at the end of the day what the opportunity is. As investors may have seen back in November last year, Raiz and the diversified media group 7 West Media announced a strategic investment in Raiz to accelerate the growth of the business. We're very excited about this investment and provides us with the opportunity to work with 7 to utilise its extensive media reach for a concerted advertising campaign, something we've never done before. The actual buzz around the office this week is definitely electrifying, as these first commercials will go live this Sunday, the 1st of May. So please tune in to 7 on Sunday evening to check them out. So to summarise in an elevator pitch style to wrap up the intro, Raiz is a micro-investing platform to enable financial freedom with operations today in Indonesia, Malaysia and Australia, with further expansion plans through Thailand, Vietnam and Southeast Asia. So today we're here. Where are we now? The numbers that I mentioned for the 31st of March 2022 quarter end, and on the screen we have the Appendix 4C and business commentary that was released on the ASX yesterday, the 28th of April. The board, George, management and myself are very pleased and happy with these results, especially in the current climate that we have. Some of our key metrics that if you go back to our half-year results or even our full-year results, there's some metrics that we highlight. So I'm not going to read through the investment highlights on this, just to mention a few that I'm very proud of. is that the normalised revenue for the Raiz platform was up 43% year on year to 4.4 million. Our annual reoccurring revenue. Now, the word there, reoccurring revenue, is important because that is our maintenance fee and our account fee. So that's our active customers. And if you look at our month-end key metrics, we define our customers, we release our numbers as customer sign-ups. So that's the number of customers that have given us their name and email address. And at the end of March in Australia alone, that was 1.2 million Aussies. Then the second number is what we call investment accounts. At the end of March, there was 582,000. So that means that they've passed the KYC and they've had money on the platform at some stage or used us in some stage. And then we have active customers. So that's the number of active customers with an account balance greater than $5 at the end of each month. So therefore, we can charge them a fee. And that number at the end of March was just over 292,000 people. So the annual recurring revenue, or the run rate, was up 54% year on year to 14.7. So that's just the accounts, the maintenance fees, which is the $3.50 per month, or the account management fee. Another metric we look at would be customers. I've gone through those numbers, but at a high level, the global active customers across all three regions that we're currently in was up 49.6% year on year to 627,000. The Aussie customers, as I said, was up 10% to 292, with Indonesia up 129% to 230, and Malaysia up 89% to 104,000. A metric that we look at, which probably gets miscommunicated in the investment circles, is our FUM. The Aussie FUM was up 46.7% year on year to over $1 billion at the end of March. And the Australian super, in that $1 billion was 192 million in the super, which we're very proud to say that it's up 108% year on year, which just shows the growing relationship we have with our customers and the trust that they're putting with us and putting larger balances on our system. The other metric for the quarter was our cash and cash equivalents at the end of the quarter, which was 18.7 million. This was a quarterly activities and report on Appendix 4C on the cash flow. So just to briefly say some things on the cash flow, the Australian business remained cash flow positive for the period, with the R&D grant being received in the quarter. We also have had some other new expenses as we increase our cost base here in Australia to get ready for the Seven West campaign. But also we recently announced a Montessori Australia partnership, which we're working with them and sponsoring a financial literacy program for schools, which is quite exciting. Also in the quarter, we had some production and development costs on the Seven West campaigns that are due to start running this Sunday. There has been some increase in costs on the operational level around the staff, the governance, framework strengthening, and as always, security and technology development. In Australia, the product developments over the quarter, we upgraded Raiz Rewards, which added more in-store merchants. But we also, as I mentioned earlier, we released our Raiz Kids 2.0, which I'm quite excited about. Something we've been working on in the last quarter, and especially closely with ASIC, is the changes to our AFSL so that the Raiz Property Fund can go live in the new year, in the new financial year. And a reminder for anybody, that's like this super estate model that we acquired last year, where we have a residential property fund that customers in our customised portfolios will get access to Australian residential property. In Indonesia, we've added new portfolios, finalising some additional ones also around crypto and some commodities in there. But at the same time, Raiz Rewards went live in the last quarter up in Indonesia. Malaysia, we added a gold investment option into customised portfolios, which was taken up very well. We actually had to turn the marketing off for a day or two because it was so popular. And recently we announced yesterday or the 27th, a partnership that's gone live with Visa now. In Malaysia, we have a partnership with a group called PNB that has stakes in both Maybank, CIMB and RHB. But what this partnership with Visa does now is opens up other banks to be able to get their roundup and transactional data onto the actual Raiz app. And Thailand continues to develop, which is getting very exciting, both on the actual app development and the licensing. I think the general comments for me around this 4C and the delivery of such positive numbers and the continued growth is in reference to sort of things like the general market. Since the end of 2021, the ASX was slightly down, the S&P index was down more than 10%, and the NASDAQ was down more than 20% over the period. In that market context, to maintain and consolidate a FUM, funds under management, above the 1 billion mark is a testament, I think, to our ability to retain our customers through the easy-to-use savings and investing features and educational content we provide. That builds the knowledge and trust that our customers want. We have managed to grow users as well, despite the fact with market conditions as they are, it is naturally a more difficult climate to do so. While user balances on average did fall a little bit due to the market correction, our ability to retain users through educational content and trust in the invest and save regularly philosophy saw a high retention rate. And as I said, I'm very proud of the team of retaining our customers through this period. Also, keeping in mind with our customers, we have Raiz kids on it, so under 18, but we also have 18-year-olds up to 88-year-olds. But the majority is down the younger end of the spectrum. And it is the first time that many of our investors are going through a steep interest rate rise or bond yields, a market correction, which you could call post the initial COVID falls, but also the unfortunate international conflict with Russia and the Ukraine. The fact that these are all playing out at the same time means we need to keep our users informed, help them feel confident in the long-term investing approach, and to learn more about their finances little by little during these trying times. Mark, I think I'll leave it there. In summary, Raiz is a micro-investing platform to enable financial freedom, currently operating in Indonesia, Malaysia, and Australia, and due to go live in further Southeast Asian countries soon. So I think I'll leave it there, time permitting, and open it up to questions.
Cheers, Brendan. We had one question from the audience already, but I think you tackled it already. It's an update on the REIT integration. So just to confirm, ideally that's going to be going live, let's say Q1 of FY23.
Yes. Yeah.
Okay.
Yeah, definitely. We're just finalising the licensing that we're working with. The tech guys are building it, and then we'll kick it off. And I think just for ease, it'll be the 1st of July.
Yeah. I just want to go back to a question for me. I just want to go back to the fully customizable portfolio and the product offerings in there. Obviously, we've seen in the media the go ahead now for the cryptocurrency ETF. Are you thinking about adding that in instead of the direct, or maybe in addition to the direct 5% Bitcoin allocation that you have? And what's the plan to add further kind of asset classes and products in there? As I know, for example, gold isn't something in there that's obviously been popular in this kind of last quarter with all the uncertainty we've seen in the markets.
Look, good question. I think everything's on the table at the moment to add into sort of further diversify and further educate our customers. I think the important thing for us is that customer feedback that we get. We pride ourselves on being customer centric. So they ask us to build something and we will. They asked us years ago for a socially responsible option, and we built the Emerald portfolio, and that fast became our second biggest portfolio. Then they reached out to us and said, hey, what is this thing called crypto? What is this thing called Bitcoin? George spent 18 months working with both the regulators or Gemini out of New York State, the regulators here, both ASIC and the ASX, to get what we would say is that there's only a few retail funds in the world that can actually offer direct Bitcoin. So that was a big move for us. And the way that we've done it is it provides that hands-on experience or an easier understanding in a controlled environment, because in that customized portfolio or in the Sapphire portfolio, we only allow up to a 5% allocation of your funds into that. Beginning of last year, when Bitcoin was so-called going to the moon, we had a lot of feedback from customers. Damn it, why are you only allowing 5%? But as soon as it halved in March, we got the comments back saying, oh, now I see why you only allow us to 5%. So it gives them all a hands-on experience to direct Bitcoin. We haven't, as an investment committee, we haven't spoken about the new ETFs that are hitting on due to go on the exchanges here in Australia imminently, I think. But it will be brought up at the next investment committee, which is next week. I still think direct access to Bitcoin instead of a derivative of is important for us and our customer base. Saying that, we will talk with regulators to see what we can do to add other cryptos here. In Indonesia, for an example, we're working closely in Indonesia to look at a crypto portfolio, because that's actually a lot more popular or a lot more interesting to the Indonesian population than the equities market. So look, I'll never say never, Mark, but there's just a few things that we have to work through to see what we do with this crypto. Okay.
Two questions kind of interrelated on the imminent Seven West Media advertising. So one is, where in kind of the vast reach of Seven West Media are this advertising budget going to be spent? Is it primarily going to be TV? Is it going to be across their kind of digital media print assets? And then a question on, I guess, what does success look like for this campaign in your eyes, in terms of, potential customer growth, or, what's kind of a targeted outcome if we look, 12, 18 months down the track, once, this campaign has run and kind of established itself in, I guess, the broader Australian market consciousness?
Look, good question. I think I'm probably going to start and answer it with a question, because it's a question that George and I and the board get a lot, is, have we reached scale in Australia? And my response to that is, we're not even close. Look, I'm surprised, but also disappointed that even when I walk the dog or take the kids down to the park on the weekend, I'll meet somebody and they ask me what I do, and I explain Raiz to them, and they haven't even heard of us. And then late last year, when we were approached by Seven West, this is where that brand awareness opportunities really come into play. And the sort of people that I'm meeting in the street, the everyday Australians, are the guys that can be ideal for the Raiz app. And that drove that decision to partner with Seven West to get that brand awareness out there. We see the Seven West relationship as a massive way to get the brand out there to all Australians. I mean, we've been very successful, and our sort of cost of acquisition, or low cost of acquisition that we have through the digital platforms, has been written up globally, but we've never tackled the sort of the Seven West channels or TV. To answer part of the question, is the majority of it will be TV, but we're not limited to just TV. It's across the other Seven West assets, which I'm very excited about. I think the product suite that we have and the product development that we've got going on, in line with what we do with Seven West, that my personal goals that I set are very achievable, and my personal goals, and I've mentioned them before, would be over the next 18 months to 2 years that we have 500,000 Aussies, or monthly active users, with a run rate revenue per user run rate of $100. We're currently sitting at 292,000 with about a $62 run rate. I think quite easily, with the products and the offering and the continued trust and relationship we have with our customers, we can quite easily get that up to a run rate of $100, which would give us an Australian business revenue of circa 50 mil.
And that's, $100 per user. Is that from, them taking up more products on the platform? So, somebody who's just doing, the very simple basic roundup function now is getting, the Raiz Super, or they're putting their SMSF on there, or they're really starting to take up, the partner rewards offerings. How do you transition from that 62 to the 100, or is it, coupled with, maybe a further kind of price increase in the maintenance fee?
Look, I won't say that it's a straight change in the maintenance fee or an increase in the maintenance fee. I'm pretty comfortable where we are with the $3.50 minimum subscription. And I think that's fair. I mean, to put it in a bit of perspective, all Australians should have a superannuation account out there, and as well as the trustee fees or any sort of management fee, there's an underlying, most of them have an underlying admin fee of at least $2, around $2 a week, which is $104 a year. If you're paying for a Raiz account and the basic level is $3.50 a month, or $42 a year. So there's definitely, we think there's some room to move between that 42 and the 100. But more importantly, as we go on, we're seeing a further penetration into our other products. Now, if a customer is paying us $42 a year on the basic fee, if they move into a Sapphire portfolio or a customized portfolio, that's $4.50 a month. So a couple of things. People are getting more comfortable in the basic portfolios and moving to the higher revenue portfolios, but also their balances are increasing. And with the fee model that we have, once you go in Australia, once you go over 15,000, that goes to the 27.5 basis points. So we want more people like myself who is an ideal Raiz user. I have a Raiz account, and it's in the customized portfolio, so I pay the $4.50 a month. I have a Raiz super account, and the average super account balance is around $20,000. So there's more revenue coming there. I use Raiz Rewards weekly for our weekly shopping, etc. So there's that advertising marketing coming there. So it's if we can penetrate or get a better share of wallet across these customers, and even Raiz Rewards, the customers realize that I'm doing my shopping, whether it be bonds or David Jones or something, I'm going to buy there anyway. I might as well get some investment back into my Raiz account. That adds to our revenue. And so we've got, 15,000 people regularly using Raiz Rewards, but we've got 292,000 active users. If we can double that, it will double our marketing revenue, which puts us on a very good way to sort of revenue run rate of $100 per user. Something like the SMSF products, we've only marketed that to our own customer base, and that's getting traction, but could always be better. And then there's the Raiz home ownership, which, as we know, we can get somebody onto a mortgage, not only is there an upfront fee, but there's also a trail, and that can all be modelled and work very simply into the $100 that I hope to get to from ARPU.
Okay, and then another one from the audience, Brendan. I think you did touch on it in your remarks in terms of the bit of capacity building that has gone on over the last 3 to 6 months. But do you feel you're kind of, to kind of summarize the question, do you feel you're set for the next phase of growth in terms of revenue, customers, market expansions with kind of the cost base and the people and the structure that you have now?
Absolutely. It's been a big focus over the last sort of 6 months, particularly in Australia with the 7 West announcement, to make sure that both not only is our technology scalable, which it is proven, and you can see the growth rates that we've had not only in Australia but in Indonesia and Malaysia over the last few years. So not only is the technology and the systems scalable and deliverable, but also our staff. We've added a few staff here in Australia. We've brought on some great skills and experience from the Super Estate team last year, which is helping us here in Australia to get ready for what we anticipate to be a high growth period here in the Australian business. Also there's been some corporate activity. There's been some changes in the board over the last 6 months, which has only strengthened both our governance and understanding at that board level for this high growth period. I think we're pretty set.
Okay, and then another question. As things have kind of opened up, especially since, let's say, from February onwards, have you seen the volumes of transactions and those roundups coming through kind of materially increase, or is it just a shift from people who were previously spending a lot online with their cards, and now it's just gone back into a bit more in-store, coffee shops, restaurants, eating out, but the kind of volume of transactions either side is kind of very much similar?
No, I don't think it's materially changed. Roundups account for about anywhere from 12 to 14, 15% of the sort of FUM or the inflow over a period of time, over a normal week, say. But George and I have made a comment to, especially since February, with markets doing what it's doing, and as I said, coming out of any sort of pandemic lockdown, especially here in Australia, but also the international conflict. People have maintained, and a big part about our education process is to, no matter what happens, small amounts consistently over time is the right thing to do. That's modern portfolio theory. So even with the changes, even with the concerns around bond yield hikes, rising inflation, what's happening to the property market in Australia, our customers have maintained those savings plans or savings goals that they have, and we haven't seen the inflows that have continued as expected. They haven't sharply risen or haven't sharply dropped. I'm surprised and pleased to see that they are maintaining the programs that they set up pre this sort of period, whether it be late 2021. They continue to do what they say they will do, and that's part of the education and the learning and the system or the tools that we provide.
Brendan, that nicely finishes us exactly on the hour. Thanks very much for coming in and giving us an update. And if anybody wants to get in touch with you, if they've got any further questions, what's the best way to contact you?
The best way is on the bottom of the releases. We have an ir@raizinvest.com.au. We also have a support line. So yeah, please ask any questions at any time. Okay,
great. Brendan, if I could ask you to please stop sharing your screen, because I know we have Michael from CV Check waiting patiently in the wings here.
Michael, right. Thanks, Mark, for having me back. George sends his apologies because he's up in our Jakarta office, so it was a bit early to join us, but appreciate it, Mark, and everybody that joined. Thank you.
Thanks, Brendan, and yeah, hopefully we'll get you back in again in a couple of months' time once this 7 West kicks off and is well up and running.
Absolutely.
And Michael, I can see the cover slide of your presentation now. If you just want to go to full screen mode or slideshow mode, just there we go. Perfect. You're good to go.
Thanks, Mark. Hopefully you can hear me okay.
Yeah, audio sounds good.
Excellent. Right. So what I thought I'd cover off today to get straight into the presentation. First of all, year-to-date results, and then go through a little bit of background of what's driving it, and also, for me, more importantly, where we're going. So the results for the year have continued to be strong. Right across the board, we've seen growth in our uptake, 77% up on prior corresponding period for year-to-date revenue at 19.7 million. And most importantly for us, the continued growth of our SaaS revenue. And I'll talk a little bit more about that and where it's coming from. Gross margin, we've lifted 64% this year from finishing last year at 59%. We do see further opportunity to continue to improve that, and that's certainly a focus of management. And for me, significantly, certainly given the history of the organisation, 2.1 million of net cash inflow from operating activities for the year. And this is now our 7th consecutive quarter of net cash inflow on an increasing basis that we're seeing, and the trajectory of where we're going, and the fact that we're generating that revenue from operating activities, as we see 1.1 million NPATA also, is allowing us the investment to continue to develop products, develop our SaaS platform that is our primary growth engine into the future. And we're doing it all at the same time while we have the core foundational revenue that is continuing to grow. So we're at the moment managing to get the best of both worlds of growing revenue across the base and having the flexibility to continue to invest that and grow the new products, while underpinned by a balance sheet of 12.3 million cash at bank and no debt. So in terms of the structural position of the company, of where we're at, we're in a very good position. What is it that sort of, when we look at our products, CV Check is historically known for our pre-employment screening and our external credential validation, and we are Australia's premier brand in that space. With many integrations into various HRIS systems. About 80% of our business, or over 80% of our business, comes from corporates in that space, and over 80% of those corporates are returning month on month, quarter on quarter, year on year. And when we look at that as our, the base of our core revenue at present, we don't see that business going anywhere anytime soon. In fact, we're continuing to invest in it and continuing to grow it. It is a solid business that has a lot of upside as we continue to see the changes in the employment landscape in Australia. But it is a business that is affected by the cyclical nature of employment, both in Australia and New Zealand, It also has a strong dependence on all of the connections and into systems and back to source organizations for us to perform those validations. So it is a harder business to actually take to the international market, not without resistance. Now, we recently, last year, acquired Bright People Technologies, and one of their products they have is the Cited platform, which not only performs the validation of external credentials and certifications, but for me, more importantly, is about providing the platform and the insights around managing the compliance requirements for your entire workforce day in, day out. So once they're on board, once they're inducted, once they're operational, those compliance requirements and the certifications don't stop. In fact, they're daily, and there's the combination of external credentials like qualifications or background screening, but you have certifications required on the job every day, and that varies by industry, whether it's your requirement to do a safety check or a take 5 before starting a task, whether it's in industrials or mining or some other kind of large-scale enterprise, but also right through to things like financial, where you have your regular certifications against your requirements on a quarterly basis, whether it's for reporting, whether it's training, doesn't matter. It actually applies across all industries. So Cited is a SaaS-based platform that actually manages that entire complexity, irrespective of industry and irrespective of the certification and compliance requirement. And that's one of its key strengths. It's been built from the ground up, not coming from an industry and then trying to adapt out. It's been built to handle certification irrespective of industry. The thing that it also drives is what I refer to internally as the so what. So it's all very well to say we're now compliant and we have that data, and it does that very well in providing audit reports and all of the evidence and tracking of that compliance information. But it unlocks the insights and the business information to actually use that data to better plan and organise the workforce moving forward, whether that's forecasting training requirements, whether that's forecasting labour availability or requirements moving for a project that you're contemplating or tasking out. But it also starts giving you insights into the operations of the organisation about how those things are being done. Because the other thing that Cited does is it actually has the workforce themselves enter their own compliance data during their day-to-day operations. So it actually creates an efficiency as opposed to having large departments that need to track that information. Via our credential passport application, workers actually enter that in themselves. And we're certainly seeing very strong interest in Cited as we discuss it more and more in the marketplace. And certainly we announced the recent hire up announcement in our latest 4C. We also announced the Atlas Mining renewing for another 12 months with all of the new monitored compliance features that we're introducing into Cited. And there's a number of more in the pipeworks that we haven't announced yet. When we look, so I mentioned that there's specifically the two distinct products that are made up of sub-products, but they headline the two products that exist. They are highly complementary because the history, the experience, the knowledge, all of the interfaces, etc., we have via the CV check product is incredibly useful in powering a lot of the information that comes into the Cited product. So we are able to leverage the experience of the two technology stacks, the experience within the groups as we've brought them together of the CV check team and also the BPT team, and how that has actually given us an end-to-end solution that actually means we have all of the pieces that can drive the insights and the power for organisations. And as I say, having the efficiency of having workers with a mobile passport to actually manage that. We've also changed the model, certainly in the industry, that we think is a bit of a game changer, in that we are removing in Cited and on with our SaaS pricing anything to do with transaction fees that traditionally organisations have had to pay for those external validations, whether it's something as simple as a police check or anything else, that when you're a subscriber to the cited platform, it includes those external validations. And so you have a simple per worker per month fee that allows you not only to forecast, budget, manage the cost of compliance of your organisations, it just simplifies the whole thing. And you get, for that fee, you get all of the platform functionality. There's no tiering, there's no alternative payments or additions, which we think has not been done before. The other thing we are doing, and we've made the commitment that even if you stop using the platform, the organisation can continue to access their historical audit records. And we're doing this for two reasons. One, because it is their data, they own it. It is imperative that they can access it, otherwise there is a fundamental limitation within the platform. But more importantly, we believe in our product. We believe that once you see the efficiency and the benefit of actually this centralised management across the board, that you're not going to want to leave us, particularly when we've made it so simple via the pricing model. We recently announced and updated in the 4C our digital passport. So that is actually a screenshot from the application. The passport that's we've announced is going live by Q4, that is Q4 financial, so the end of June. The passport actually gives workers the ability not only to enter their compliance information or capture it, it also allows them to control it and share it. So if they move from organisation to organisation and they've done these external validations, they can simply pass them on via the passport. And we're doing this, A, because we want to facilitate that sharing economy within for the workers, but also because it becomes the currency for our platform. A worker moving from organisation to organisation or subcontracting to subcontracting position can demonstrate the features and functions of our platform for us. We've also begun our certification to become Australian Government ID recognised, their TDIF program. So examples of government TDIFs, MyGov or Medicare IDs. And what this gives us the ability to do is to trade within that economy. So when we share a credential, it is validated against a government recognised digital ID. And this is one of the things that powers the wording we've started using, which is our platforms provide you the know your people type functionality. We've all started hearing about the know your customer initiatives. Well, we're extending that, and this idea that it applies directly within the workforce also, and it's backed up by a recognised certified digital ID to validate exactly who it is. So in terms of the market opportunity and looking where we're going, it's well recognised, the RegTech and compliance marketplace globally already is recognised as a very, very significant marketplace. We think it's at the beginning of that recognition. Compliance is only getting more complicated. The onus on organisations, whether it's now greater recognition around ESG, your genuine personal workplace safety for your employees, we've heard all of the recent stories across various industries, etc., to mental health and well-being, all of these things actually fall under compliance obligations for organisations. So we're at the right place at the right time. We also see that it applies across all of these various organisations. It doesn't matter what the sector is or the industry, they have the same requirements within their relative to their industry. So right from media, right through to financial services, we're seeing that space. The average that across organisations up to 5,000 people is they're spending $2,500 a month per worker to manage their compliance within the organisation, and that is all of the costs that these organisations incur. But when we look at how you then look to reduce it, there are a number of initiatives that have been recognised. Regular audits are a key thing that is seen to basically get ahead of the curve of identifying issues before they become incidents. And with Cited, with our SaaS platform, we're effectively real time. So you can think of it as a constant audit on the data, giving you an even greater effect. There are also 12 initiatives that are generally regarded and highlighted across that organisations not only for best practice, but that those best practice reduce the cost of compliance. And straight out of the box with the feature set that we have today, Cited solves 6 of the 12. Within the Australian marketplace, we've looked across where we're going and what we're targeting. The higher up announcement that we recently made is significant because it's in healthcare and social assistance. That is one of our big initiatives that we're looking at the moment, and certainly a lot of our focus in marketing and promotion is into that sector. The group has historically, from the cited product, been very strong and continues to be very strong in mining and industrials. And we will continue to be so, but with its applicability, the growth we're driving for and expecting to see is in those new sectors. So where are we at? Just a quick summary of the position at the moment. The CV Check product, the pre-employment screening brand in Australia and New Zealand, continues to perform very well, and we expect it to do so. Not only have we seen or benefited from the changing employment landscape at the moment and the high demand for labour, we're also increasing our penetration with other checks and services and bundles and options. We've done very well with our COVID vaccination validation, for instance. But we have all of the things like automated reference checks, etc., that are also doing very well. And then the growth engine of the organisation with our SaaS platform and our Know Your People initiatives, and the announcements of Higher Up and Atlas Iron and a number of others coming. The digital passport is well progressed, and you saw the screenshot there is actually from the application and very much on target to launch this financial year. And also, which I haven't touched on yet, the discussions we have underway about taking Cited platform internationally. And whether that's the white label or whether it's an initiative directly, we are in discussions on both of those to actually see, and we are hopeful of some progress this year. Any questions?
Thanks, Michael. We have one from the audience. Can you talk to the improvement in the gross margins for the group? Is this purely revenue mix between Cited and CV Check, or are you seeing, improving gross margins in each division, as they kind of scale themselves?
We've done it. There was a little bit of initial improvement from the bringing together of the relative products, as you would expect with a greater SaaS position versus the transaction. But the majority of it, and where we see further improvements possible, is just efficiencies within the organisation and the approach. We've kicked off a number of months now initiatives of just review of the approach to the methodology of the certification processing, turnaround times, etc. And basic initiatives there have resulted in those improvements. And that's why we're confident there's actually going to be another step further. So we're doing a further deep dive across that, but then we're also introducing further automation into those processes via some of the technology initiatives, and the passport's a key one to that, which will drive those margins even higher.
Okay. Questions are coming in thick and fast here, Michael. Kind of, I don't know if you caught the end of the prior presenter's presentation, but they've invested a lot in cost base for future kind of revenue growth. The same question to you: how do you view the current cost base and appropriateness for, the product extensions and the international expansion that you've touched on?
It's something we look at really closely, because what I don't want to do, and certainly my experience in previous organisations, a strong understanding of how you actually reach the international marketplace without just a blanket replication of a lot of the structures, etc., that we have now. So I am not expecting to change the material cost base or the people base as we move into international expansions. The only growth areas that I'm expecting are on the sales and the revenue generating side, because the way we've structured the platform in terms around the monitoring being 100% cloud-based, it is replicable from Australia to actually perform those tasks. Where we have local privacy arrangement requirements for data onshore, then we will meet those, but we can still do that within a cloud environment. The credential validation then becomes the question of where you need back to source in particular jurisdictions. And the intent is not to replicate those locally, but where necessary, partner with the appropriate organisations to give us the credentials into the system. But the value in the system is in the analysis and the reporting of those credential status, as opposed to the external credential validation in those expansion markets. One of the big things that we're seeing in the analysis that we're doing is a lot of the markets that we're targeting and talking to now are coming off such a low base of credential validation and certification management now that moving them even marginally up the chain. So it's a hell of a lot easier to go from 0 to 50% than move an organisation or a sector from 90 to 95%, say. So I suppose to summarise that answer, it is not our intent and not our belief or our plan to increase the current cost base of the organisation materially to support international expansion.
Another question then, product pricing, any major pricing reviews in train or in place as you kind of look at, Cited more closely and CV check on a go forward basis?
So what we've given and I've spoken about before is the range that we're in the $15 to $30 per worker per month for the full access to the Cited platform as a single turnkey. Everything we're doing and the discussions we're having with customers around that and the things that we haven't announced yet, we haven't had any pushback or issue around that pricing point.
Okay, great. And then can I just ask a question in terms of cross-sell between Cited and CV check? Do the customer bases look materially different in terms of you can, sell CV check to the Cited base and vice versa, Cited or CV check into the Cited base, or are they, pretty much similar in terms of, they might be already have been utilizing Cited before you took ownership of it?
There is absolutely opportunities to move CV check customers into the Cited platform, and that is very much part of our plan over the coming year. If you like, Cited is a superset of functionality of CV check certifications. So the simple way to look at it, and certainly the way we're approaching it at a high level, is this customer an organisation that is providing the information that is being certified via the CV check product into other parts of the organisation for ongoing requirements of monitoring and management? And if that is the case, then they're absolutely a prime target to actually discuss a migration over to Cited. If they're simply stopping their requirement once the person becomes employed, whether that's labour hire firms, recruiters, etc., then they're perfectly suited to the CV check platform.
You mentioned Atlas Iron signing for another 12 months on the Cited platform. Is that kind of what we should expect for people or enterprises, corporates, in terms of a sign-up commitment? They're going to say it's let's say $20 per employee across their full workforce, and we're going to commit for 12 months, or are you maybe angling for longer term commitments, maybe a standard enterprise kind of 3-year agreement?
Yeah, no, we do have a variation across them. Atlas is a long customer, and right back to their original terms, it's been a rolling 12-month agreement. The significance in this announcement is they specifically extended this 12-month agreement to include the monitoring component and the new functionality within Cited, which wasn't there the last time they renewed. It is very much our intent for enterprises and corporates that it's a standard SaaS model. The longer you're committed to in those arrangements, the more attractive the per worker fee can become.
Okay, so there's a kind of a pricing advantage to the corporates in return for greater commitment.
Yes.
Okay. And just regulatory changes across either CV check or Cited that I think are a big opportunity for you. I remember back, it must be 2 years ago now, or 2.5 years ago, there was big changes in New Zealand, I think, with healthcare workers, where they all had to, it might have been in the childcare space specifically, where they all had to have police checks and background checks done to even be employed. And I know that drove a lot of business for the CV check business at the time. Is there kind of anything muted from governments anywhere where you think this is going to be a big opportunity and companies are going to really have to invest in order to remain compliant under the new rules?
There's a lot of it. And interesting you mentioned the New Zealand one. We have just renewed that agreement to do all of the background screening for healthcare workers in New Zealand with the New Zealand government. So that was a significant win then. And obviously we've done something right because they've just renewed it again. The infrastructure bill from the government and also the increasing focus on skills transfer and knowledge that we're seeing are all initiatives that are driving our opportunities. The other one from the other side is shareholder expectations around ESG and just general government obligations, governance obligations on organisations is the other one we're seeing. We've got directors' ID requirements now coming through. All of these are examples of how compliance is no longer something you put at the back of the board report to say, yes, we've fulfilled that obligation. It is now being looked at, it is now being analysed and taken into account, not only in the reputation of organisations, but they're being held to account for it.
And two final questions, we'll try and squeeze them in here, Michael, from the audience if we can. You've been in the hot seat for about a year now. Are there
9 months.
Any parts of the organisation you feel still need improvement, or is the operating kind of rhythm and cadence kind of where you want it to be?
We're getting there. I'm extremely happy with progress over the term. I was very lucky to inherit a solid exec team made up of a combination of the two companies that have come together. To that, we've added a head of product who's an extremely experienced product management person, but with sector relevance, which we were very fortunate to identify. And then most significantly, adding Jeff Hoffman, which we've just announced recently, for me is I'm going to say the key final piece in the exec team that I wanted to put together. So Jeff is an extremely experienced senior revenue person with a strong background at both Census and AdStream, he's used to working with very large corporates and he's used to presenting at the C-level and understanding the fact that we're presenting the solution to problems, the understanding that the value proposition has to lead and the benefit to the customer. And I'm extremely excited to have him on board. So having said that, am I happy with how things are going? Absolutely. And where we're at and what we're doing, but we're not done yet. I still think there's considerable opportunity for efficiencies within operations and driving our gross margin, and we will continue to do that.
Okay. Michael, thanks very much for joining us this morning. If I can just quickly ask if anybody's got further questions, because we've had quite a number. What's the best way to reach out to you?
So at the bottom of our most recent 4C, there is all of my contact details. We've also got the Capital Network details on there for our investor relations. and very open to anybody reaching out at any time.
Okay. Michael, thank you very much for joining us this morning. It was great to hear the CV Check story firsthand once again. And yeah, we look forward to further announcements over the next 12 months.
Thank you very much, and thanks for the opportunity.
No problem. Michael, if I could ask you to stop sharing your screen, please. And I know Blair Norfolk, CEO and founder of BIOME Australia, is standing by.
Yeah, hello, Mark.
Morning. If you want to start sharing your screen, it's coming through now. Yeah, perfect. There we go.
Wonderful. Shall we kick off then?
Yeah, kick off, Blair. Go first.
All right. Thank you, everyone, for staying through. We note it's market's open now, and I'm sure you've got lots of things to do, but hopefully you really enjoy our presentation, our quarterly update. I'll kick off by introducing BIOME Australia before we get into a bit of an update. So first off, our mission, it's quite holistic. It's to prevent disease, improve health outcomes and quality of life, and make our products accessible to all. And it'll be quite clear how we do that once you hear a little bit about our clinical research and our products on market. So who is BIOME and what do we do? So BIOME Australia is the company behind our flagship brand, Activated Probiotics. Activated Probiotics is a disruptor in the probiotic category in that we are first mover in the world of live biotherapeutics or targeted precision probiotics. So the world is looking at the next evolution of the probiotic and gut health category by being able to isolate specific microorganisms or bacterial strains that have the ability to impact specific disease states. So it's a very exciting area. Big Pharma's been spending a lot of time in R&D in this area in recent years, and to be first mover in this space in complementary medicine is quite exciting, and especially coming from the Australian market that has quite a good education on probiotics and quite a large probiotic category here as it stands. So all of our products are backed by either placebo-controlled, randomized, double-blind clinical trials that we've either done ourselves or been involved in with partners, or have ingredients that have been through these clinical trials. So it is the research that really sets us apart from anyone else in the category or the industry, and it positions us nicely to look at opportunities for adjunct selling alongside medication in pharmacy for conditions such as depression, asthma, eczema, recently acne, and a number of other high volume drug classes through the pharmaceutical industry that I'll get into in a little bit. So to start off with a bit of a highlight on how the company is growing. So we IPO'd on the 30th of November 2021. So we've been in market for about 4 months. The company's grown from strength to strength since IPO. We're really pleased to report that our distribution through Australian community pharmacy and independent health practitioners has grown from a base of 2,000 at IPO to 2,500. So that's 25% increase since essentially the 1st of December. In a tough market with COVID impacts and pharmacies being quite distracted by vaccinations, we've managed to grow quite fast in distribution and also sell through. We have a strategic partnership with TerryWhite Chemmart. TerryWhite is the largest pharmacy group in Australia. They have 500 stores now, and they are certainly the largest health-focused group as well. So we've got Chemist Warehouse, which is the leader in discount vitamins and shampoos and fragrances. TerryWhite's the leader in professional products and giving patients care and advice. Financial performance, we're really pleased to share that we did 925,000 in the March quarter, which was up 58% versus the PCP, and 2.73 million for the year to date, which is 82.6% up versus the previous corresponding year to date. So we'll share a little bit more about how we think we'll finish the financial year, which is unusual for us, but we are very confident to share a bit of information on that, being how the final quarter of the year has started. And we're currently at an annualized run rate of touch over 3.7 million. Clinical trials. So as I mentioned, that is the foundation of BIOME Australia and Activated Probiotics. So we have more than 10 clinical trials we've been involved in and had successful completions on and incredible clinical trial outcomes. Recently, so just this quarter, we completed and had peer-reviewed and published our asthma clinical trial. This is based on our probiotic BIOME Breathe, the world's first probiotic for asthma. Essentially, in this clinical trial, 440 children took the BIOME Breathe probiotic versus a placebo for 4 months, and we saw a 64% reduction in asthma exacerbations or asthma attacks, which is quite remarkable and does provide a potential life-saving therapy for children to take alongside their standard pharmaceutical interventions for asthma. The other one that concluded in the March quarter was our BIOME Acne clinical trial. So this was on a novel concept. BIOME Acne was not launched on market till the last week of March, based on the successful clinical trial outcome. In the trial population, we saw a 38.9% reduction in acne symptoms. While it's not a life-threatening disease, it's a huge category and one that most of our distributors, pharmacies, and practitioner partners in the market are incredibly excited about, and pre-orders and allocations have gone out to our network over the last week of March and the start of this quarter. So that is a very interesting category, being that skin is one of the largest in the pharmacy category, and also one that affects things beyond the skin, such as mental health. There is also 2 clinical trials underway at the moment, a third about to commence. One is on depression, subthreshold depression, using our BIOME Lift probiotic, which is already on market. This has already been clinically proven to support patients with depressed mood state, anger, stress, anxiety, and sleeping issues. It's one of our better selling products because it works, and we'll be really pleased to conclude this trial hopefully within this calendar year, and have some very nice new data on depression, which should support that product further with medical professionals, specialists, and psychiatrists. A few more updates. So we've had reports from the field. So Terry White Chemmart, our largest pharmacy partner, Bloom's the Chemist, and Symbion. Symbion is EBOS Group, which is the largest pharmaceutical distributor in Australia. All report that Activated Probiotics, our probiotic brand, is the #1 growth brand across the entire vitamin category and professional vitamin category. The vitamin category is the largest in pharmacy, and outside S3 low-risk drugs, it is the, as most pharmacies will say, it is their high volume, high GP shelf in their store, where they essentially balance out or improve their gross profit and margins, where other shelves sort of drag them down. So to be the #1 growth brand over the last year, and that's to the end of May, is incredible, and is also helping us leverage further distribution, which we'll look forward to sharing with the market over the coming quarters. We are also now reported to be #2 in revenue, #1 in growth, #2 in revenue in Terry White Chemmart, to the brand leader or the market leader in the professional line. So that means we're now positioned as #2 in our largest partner. And as we launch into new distribution, we believe we've got the model right, and we have the best sales team in the industry to make sure that we can keep replicating this as we grow, doing it the right way with service, education, and training, rather than deals and discounts that are commonly seen on the market. Part of that service is we do provide bone health clinics. So our team of experienced health qualified educators and sales reps will visit a pharmacy, and they'll provide a health clinic, such as a bone density scan or an iron screening clinic. This allows us to provide an additional service for our distribution partners, our pharmacies, and our health practitioners in clinic. And that service allows us to develop stronger relationships and be at that value add that makes them think about us and put us first whenever they're thinking about recommending a probiotic in their store. We have ongoing research collaborations with La Trobe University, Federation University, and a number of other universities in negotiation at the moment, which means a lot of our research we don't have to pay for. So our R&D fund last year was very minimal. I believe it was about 150,000 we put into R&D. And out of that, we had 2 successful clinical trials and a number of others underway, being that we have access to, grants and university funds through the partnerships we have with these universities. A couple of new product launches this quarter as well. So BIOME Advanced 10-pack, which is a smaller size of one of our best-selling products, BIOME Advanced, which pharmacists prescribe alongside antibiotics. and BIOME Acne that I already mentioned, that launched at the very end of Q3, with BIOME Baby to follow, BIOME Baby Probiotic to follow toward the end of the financial year. So I've talked a little bit about IP and research, but I'll unpick it a little bit more. So being that we work in this novel area of live biotherapeutics or targeted probiotics that can support patients with severe medical conditions, it does mean we need significant IP and research backing. So of the 23 products in our portfolio, 17 of those are proprietary. We own those formulations outright. 5 of the products are very unique products that are based off 10 or 15 years clinical research that we decided we wanted to bring in. And anything we don't own will have a significant, in most cases, 5 years exclusive distribution license on those products, which is renewable. And on those products, if there are any in the 5 that we don't own on exclusive license, our IP strategy is to conduct clinical trials on them in the local market in Australia. And part of the deal on those clinical trials that we facilitate is that we then get to own that IP in our markets long-term outside of the license. So essentially locking in all of our IP, being that we have no competition on the market at all on a product level, and making sure we can maintain that over the next 5, 10, 20 years. There's a technology that we also use within our products. It's a microencapsulation. So to take a step back for those that are not as familiar with the concept of a probiotic or a gut health concept using a live bacteria. So essentially, if you take a probiotic supplement that you might have picked up in the pharmacy or the supermarket, 80 to 90% of that product will die in your stomach. So your stomach's acid is a natural defense mechanism against bacteria, pathogens, viruses. And it does a great job of protecting our bodies in most cases. What it doesn't know how to do is decipher the difference between a good bacteria that we're taking for our health and a bad bacteria that might be a virus coming into our body. So what we do to protect our product and make sure that we have much higher efficacy to anyone else on the market is we've developed this microencapsulation technology with our Italian partner. How this product works is it's a thin layer of plant-derived fat, so it's all vegan and gluten-free friendly. A thin layer of fat gets sprayed on the microscopic bacteria after it's been freeze-dried, and it's clinically proven to ensure 5 times more of our probiotic survives to get to the gut or the large intestine than anything else on the market. So any other uncoated probiotic, which is everyone else. So simply from a base product perspective, even on our more mainstream gut health products, not even looking at our real specialty products, in a retail setting in pharmacy, we can detail pharmacists and their retail staff and say, our product is 5 times more effective at surviving than anything else on the market. And it is a massive point of difference for quality and efficacy. This is just a bit of a clinical pipeline. I won't stay on this, but these slides can be made available and have been uploaded to our portal on the ASX as well. So as you can see, the asthma and acne clinical trials were completed in Q3. The depression trial is well underway and getting close to completing recruitment. This is on calendar year, not financial year. Sorry for any overlap. And our trial on BIOME osteo and osteopenia, osteoporosis, which I haven't mentioned yet, is also well underway. And more recently, a further clinical trial of Federation Universities just commenced. So we look forward to having some updates to market on those other trials. What's important to note is that the one on depression and osteoporosis are already clinically proven for these conditions, but these are follow-up trials to be able to look at a later stage, less healthy population, so we can potentially look at opportunities for drug applications in the future. So this is our beautiful activated probiotics range. So we've broken it down into categories because there are a few products in the range now. All of them are selling well and deserve their spot on the pharmacy shelf. We start off with the more obvious products that are our high volume movers. So digestive and gut health still dominates the probiotic market and category. We are first mover in the targeted and live biotherapeutic space. However, we do sell a lot in gut health. Gut health is upset tummies, IBS, traveler's diarrhea, antibiotic co-administration, irritable bowel syndrome, inflammatory bowel disease. There's a number of conditions that fall into gut health that many people, or most of the Australian population, does experience some of these symptoms. And we also are able to support people with immune health with all of our gut health products based on the research on the strains. So This does represent a large part of our portfolio, the BIOME Daily, BIOME IBS, and BIOME Daily Kids. However, we have expanded into a number of incredible unique areas, such as the BIOME Breathe probiotic for asthma. Recently, BIOME Eczema probiotic that was clinically proven to reduce eczema symptoms in children and adults by 52%. The only product of its kind in the world, and it is very, very effective. I think I might even have a photo in these slides of it before and after. The BIOME Lift probiotic for mental health. So I've mentioned this one already, and it has a further ongoing clinical trial on depression. This one sells very well because it works. Essentially, you take the probiotic, and within 3 weeks, you have a significant, I believe it's about a 70% reduction in a number of low mood related symptoms and sleeping quality. Women's health is a huge area for us. Women are our customers, essentially the shoppers in pharmacy. And there are a number of unique areas with research that we're able to support women with different health conditions. So start off with the BIOME Her. This product is for thrush, candida, and UTIs. It's a huge mover in pharmacy in the area, and most women will have a number of creams in their cabinet. It's not an easy conversation topic, certainly for men to detail to women. However, it is something that women will typically go to their pharmacist for and ask for advice on how to treat it, because currently the main course of treatment is often antibiotics, and it's not effective. BIOME Osteo, clinically proven and published in the Lancet for Rheumatology a year ago. This one reduces bone loss in 50 plus women by 78%. Very, very effective probiotic in reducing and preventing osteoporosis. So one that pharmacists and doctors get very, very excited about and really show the credibility of our brand and the quality of research that we do as a company. BIOME Prenatal, which speaks for itself, and BIOME Iron. This product helps younger females maintain high levels of iron in their body, which is a huge problem and affects about 35% of the female population. Recent launch was the BIOME Acne. So that was the last product I will detail here. But as you can see, there's 13 products in the activated probiotics range. They all sell well. They all have large-scale distribution across the Australian market. And as I'll mention shortly, we're also recently in Europe and in certain countries that I will detail. So onto distribution. Right now, we're stocked in 1,650 pharmacies. The full activated range is stocked in 2 shelves, so that's 350 pharmacies increased since IPO on the 30th of November. Pharmacy does represent 67.5% of our sales, so it is our main business is pharmacy. However, we do have a secondary channel that has really helped diversify and de-risk our revenue growth, and that is the independent health practitioner channel, which is made up of naturopaths, nutritionists, dietitians, and general practitioner doctors that work in integrative medicine. So what I'm really pleased to report for Q3 is this channel has grown from 20% of our revenue to 29%. So we're getting a more balanced split in our revenue channels. And we are already the #1 professional probiotic brand in Australia by revenue as well. So it is a market that we are having a lot of success in. So here are a bit of a snapshot of the pharmacies that we work with. So Terry White Chemmart is our largest partner for the current distribution network, but we're in a lot of the small and medium-sized pharmacy groups and some of the other large ones, such as Pharmacy Choice, which represents 800 independents in Australia through the Symbiont EBOS buying group. Bloom's the Chemist, which is around 110, 120 pharmacies, and Wizard and 777, who completely dominate the Western Australian market, which we do very, very well over in WA. So right now, all of our products pretty much get sold just through these 6 companies. So we have 6 customers essentially who supply our pharmacies and our practitioners around the country. Symbiont and API, the 2 largest pharmacy wholesalers. And then we have 4 practitioner and health food wholesalers in Vitally, Oborne, Araya, and Renner. So essentially, once or twice a week, we're sending orders out from head office in Cremorne in Melbourne. And then these companies distribute our products same-day delivery with no delivery fees to pharmacies anywhere in Australia, which is quite an incredible service that we get for a very small part of our margin. So opportunities for growth. So while we have unique products that still have an opportunity to continually improving their market share and sell through, we have an opportunity at BIOME Australia that no other competitors in the market have. So being that probiotics by nature are seen as safe to be taken alongside pharmaceutical interventions and medications, it gives us a unique opportunity to be able to, with our clinical data backing, to be able to get doctors and pharmacists to prescribe them alongside medications. So this is a snapshot of the PBS. In 21, there was 217 million prescriptions gone through the PBS. And if you look at the complementary medicine market in Australia, that's roughly $6.7 billion. This is a whole market outside of that a lot of our competitors that have not been able to tap into. So, for example, there's around 50 million prescriptions a year for mental health drugs. There are, I believe, 20 or 30 million prescriptions a year for asthma medication. And there are maybe up to 100 million prescriptions a year for antibiotics. So every time one of those drugs is dispensed, there's an opportunity for activated probiotics or a BIOME product to be put into the basket and for the pharmacist to recommend that a patient takes one of these products alongside their medication. So this is something that is phase 2 for the business. We're just starting on this plan this calendar year, and it is rolling out with great success in early days. So we're starting off detailing doctors to get them to actually write prescriptions for these products. Prescriptions are not required, but that active recommendation by a medical professional carries a lot of weight and does tend to lead to a purchase almost every time. So a bit of an update on sales. So I mentioned that we did 2.73 million for the first 3 quarters, and that represents 82.6% growth. Typically, the March quarter is affected by seasonality. So January and February are usually the slowest months of the year based on back to school holidays, as pharmacy traditionally runs alongside the school year, as pharmacists will take time off in January and February. So we're really pleased that March was actually up on December, which usually March would be down on the December quarter seasonally. So that shows really strong growth, certainly versus the previous corresponding March quarter where we're up 50+%. So product ranking. So as I already mentioned, gut health is key to our range. So the top 2 products, BIOME Daily and BIOME Daily Kids, are gut health concepts. BIOME Advanced is co-administration with antibiotics. And then we have some of our targeted unique products in the top 8 products, which all represent 80% of our volume by sales. So there is a really healthy spread. All products have their place, but of the 13 products within the range, they're all selling and all representing their place on the shelf with retailers. But gut health is currently number 1 for us. Customers. So as I mentioned, pharmacy is 67% of our business. Practitioners now represent about 30% of our business. This goes through 2 wholesalers. There's no risk in guessing who these are. I've already mentioned that Symbiont and API are our 2 largest customers. But then what we're really pleased to share is with our practitioner wholesalers that supply the naturopath community and private practitioner community. Our wholesaler A, which I believe represents Vitally, has gone from 3.2% to 8.8% from financial year 21 to the March quarter. And same with wholesaler B, it's gone from 2.9 to 7.8%. So really strong growth in that category that's really supporting our overall and top line revenue. So growth strategies for the business. I might just pause on this slide for a minute and talk about a couple of other things before we get into questions. So I'm really pleased to report that in a tough COVID environment with raw material prices going up, competitors all with significant 30 to 50% of their lines being out of stock, and shipping prices, BIOME's managed to increase its margin for the first half of the financial year from 54 to 58%. We've done that through some cost-saving measures, through having better efficiencies as a business, and making sure that we work with multiple shipping carriers so we can always get the best rates. I'm pleased to also share that in Q3 we managed to maintain that 58% margin, and we'll look to increase that further over the coming quarters and periods. Recruitment as well. So we are as good as our people, and at BIOME we've managed to recruit the best field force and sales team in the industry. We're widely regarded to have the best educators, the best trainers, and the best salespeople. And the reason we've been able to achieve that is we are the new innovative company within the complementary medicine market. A lot of the larger companies being Metagenics and Bioceuticals that are both 100 million plus annualized revenue both of these companies have changed their strategies through COVID. They have significant out of stocks, and they've moved away from education and training to discounting and online sales. So they've maybe lost their way a little bit. We've been able to pick up and become the leading brand in education and training to really get a higher volume in sales in each of our accounts, rather than trying to be in more accounts doing less volume. Less accounts with higher volume is a great strategy for us to burn less money in terms of support, but also be able to grow and make sure that our model is consistent as we keep investing. So growth strategies is to continually improve sell-through, and we're doing that in an account-to-account basis. Our reps are out on the road visiting at least 6 stores or 6 accounts every day and doing high-quality training, education, and health clinics. So making sure that every one of our accounts, we're the number one sales brand, and in many cases, we'll be doing 5 to 10 times the market leader or our next competitor's volume in a case-by-case basis in each pharmacy. We have a further product launch in BIOME Baby toward the end of the financial year, which will definitely give us a bit of a boost in sales, and also continually growing the independent health practitioner channel in Australia, UK, and New Zealand. So I haven't touched on this briefly, but the UK market is a new market for us that we've done a test market in last year. We're not in retail over there. We're just in the independent health practitioner channel. The reason for that is it's low risk and it's low cost. So it's not significantly increasing our working capital expenses, but it is already above a break-even exercise as a standalone. And we're looking to grow that market significantly for opportunities to further expand into European territories. Growing our distribution. So while we do have 2,500 distribution points in Australia, which is quite significant, we have at least 30 to 40% of distribution points in the market. We are looking to get into the Sigma group, which is Amcal Guardian and another 1,500 independent pharmacies in Australia. They represent about 30% of the market that we hadn't currently access to. And then also the Priceline group as well. So those are ongoing conversations that we look to have updates on for the market over the coming periods. And then short term, 2 to 5 years as well. We'll expand further into the adjunct medication market, which is a market that we have the opportunity to own. That takes time. It takes doctor detailing. It takes more time working with pharmacists to set processes and programs for them to acknowledge each time they prescribe this medication that they recommend one of our products. But it does really not, it prevents any cap being put on our annualized revenue targets over the next 2 to 5 years, because there is essentially no limit to the size we could grow with the number of medications being 217 million prescriptions per year. There is quite a large market for us to work on. So the financial outlook, this is the last stage, and I know I've probably spoken a little bit long, I apologise. We don't normally do a forecast, and we're not doing a forecast, but we are very pleased to share that we expect Q4 to be our strongest quarter to date. We've already seen the numbers for April come in, which we're very pleased with, and we look forward to being able to share our best quarter to date once we complete it and the financial year. So I know there are no forecasts put to market. Canaccord Genuity, in their reports of our company, they do a quarterly report on BIOME. They've put the number of 3.7 million to market as their forecast for BIOME. We'll be really pleased to share with shareholders and the market how we finish the financial year, but there will be significant support in new distribution that we look forward to announcing soon, and other updates in sales and growth to share with everyone. So I'll leave it there and be really pleased to hand over to questions, and yeah, anything else from anyone would be great.
Blair, we're just about up on time. Have you got 5 minutes to take questions, or have you got a?
Yeah, no, I'm good.
Got to go to.
No, I'm great.
Okay, let's take a few. Firstly, the B Corp designation, it's on all of your side things. How important? I mean, that's not something we see in the listed space too often. I think there's only about 2 or 3 other companies on the ASX that have it. How important is that designation in terms of getting people to kind of trust your product, or switch from a more well-known brand you know, even though it doesn't compete with you, but, you know, to get somebody to switch from a Swiss or a Blackmore's daily probiotic to yours, does that B Corp certification help? And, you know, is it also a benefit with, you know, ESG from, you know, shareholders, investors' point of view?
Absolutely. I think from a company standpoint, for anyone that's been through the process or knows about B Corp, it's one of the hardest certifications to gain. It's essentially it's a 2-year process to get certification. What it implies is a B Corp company operates at the highest standards of social, environmental, and, you know, a positive impact. So you have to be an impact-based business that is helping people, solving problems, and looking after its people. So you know, we give opportunities for our staff to become shareholders, which really supports retention of some of the best staff in the industry. It shows that we care about the environment, sustainability, which, you know, I think a lot of people in this industry probably are not as focused on. But it also just shows that we really care about what we do. We're not just trying to produce a product to sell to people. We are really trying to solve problems and have a, you know, a key focus on impact. So customers absolutely care about it, but I think from a business perspective, anyone that's looking at BIOME is something they'd be interested to be involved in. It shows that we are, you know, really true to our beliefs and our values and our mission as a company.
And if we kind of go back to the, you know, the 2 to 5 year outlook, currently it's very, you know, focused on, you know, the 2 main distribution channels. I noticed you didn't really talk about direct to consumer, but is there any scope or plans to do direct to consumer from your own website? You know, I'm thinking of the, you know, the BIOME daily, you know, you could even set it up on a subscription basis. Is that part of your planning for the future, a direct to consumer kind of revenue angle or bucket?
Yeah, look, it absolutely is, but we also play to our strength and we like to go against the trend of what everyone else is doing. So the B2C online space is very crowded right now. It's incredibly expensive in terms of marketing commitment, and it tends to be run by deals and discounts rather than quality and education and research. So we're doing very, very well with continually growing in the fixed retail space. Community pharmacy is always going to be important, bricks and mortar channel, as is the private practitioner channel. So that's, you know, your naturopaths and your doctors in private practice actually consulting patients. Our strategy for that is to open up portals for doctors and pharmacists to prescribe our products via the online store. So if we were to turn on all of our professional products, so the Activated Probiotics is a practitioner only line, which means it's not allowed to be discounted or sold online, essentially. The reason for that is we're trying to protect the business of our pharmacies and our practitioners. And if we start selling it online and it starts popping up on discount, you lose the support and the credibility from our main distribution channel. So it's something we need to be quite careful with. But the opportunity is to develop a safe and secure portal where we can sell to patients, but it's not necessarily about making it really easy to buy on deals or discounts as you might do with a shampoo or a body scrub or a cheap discount vitamin. It's more about making sure that these products come with service, because the reason why we invest so much in research and in education is our products are very sticky. So recent data shared by Terry White ChemMart through their rewards database is the average transaction from a customer is 1.8 units. So they're buying essentially 2 boxes every transaction, and the customers are coming back 6 times a year. So on average, customers are coming back into a store 6 times a year to buy 2 products, which implies that they're buying our product every month for the entire year, which is almost unheard of. And the reason for that is the product works, it's got good research, and it comes with the advice of a pharmacist. Whereas in the online marketplace, you know, your average customer is probably buying 1.2 products, and they might buy for 1 or 2 months, and then it's about constant customer acquisition versus we're focused more on retention.
If we can just talk margins for a second, Blair, between, let's say, the 2 main distribution channels that you have now, you know, the Terry White channel and the independent health practitioner channel. You know, you're going through distributors, you know, specific to both those markets. Are the margins basically the same in both, or do you get, you know, slightly better margins through the independent health practitioner channel?
Look, no, we have a fixed price for everyone. That's part of, being a B Corp and not wanting to play games and foster long relationships with all our distributors. There's one price for everyone. So our margin is fairly fixed. There are larger marketing support packages that go into retail, such as, the pharmacy banner groups expect certain marketing support, whereas the practitioner distributors don't require this. So they're a lot cheaper to work with from a marketing perspective. But margin-wise, yeah, we're averaging 58% across, and both have the same price. So we do just as well with both. The one thing I will say is, though, the UK market, we sell the product for about 80% more than we do in Australia. So we've essentially flipped the pound for the dollar symbol. We've had no pushback on price. That does also help pay for the shipping and customs duties and things like that. But while we have a 58% margin in Australia, I'd say the UK is representing about 65, 66%. So it's another reason why that market's quite interesting to continue growing.
Yeah, that was going to be my next question. But the follow on then from that again is then within the different product segments, margins per product. So, something like the BIOME daily versus, a more specialized BIOME osteo. Does the BIOME osteo come with a bit better margin and a bit higher pricing because it's had its own R&D, its own clinical trial? It's a bit more of a specialized product, or can we kind of throw a blanket over that, they're generally on average, give or take, about the same?
So, no, you hit the nail on the head. Our premium specialty products, we do make a lot higher margin on, which is why we're invested and we incentivize our sales team to continually working on growing the sales on those products over the other ones that sell themselves, being the gut health concept. So BIOME Daily Kids, there's no secret that they're also at the entry level price point. So these products are sort of $34.95 retail price versus the top end of the range, the BIOME Osteo, which is, clinically proven to reduce or prevent osteoporosis and reduce bone loss by 78%. So it's got a specific action and has the support of doctors and pharmacists for patients looking to prevent that disease. So that one has a higher margin. So our product margins range from anywhere from high 40s to high 60s. So the BIOME Breathe and the BIOME Osteo sit in the sort of mid to high 60s, and then the high volume entry level products are sort of more around the 50% margin. So yeah, there is a bit of a spread, but we're continually investing to grow the high margin products.
And in terms of people discovering your kind of product for the first time, is it more just that general awareness in the market of, we've seen microbial lists, you guys have listed. I see just a lot of articles myself generally in the media on gut health, probiotics, testing. Are people discovering you that way, or is it from the good work that the sales team are doing? And when customers come into store or into these health practitioners, that that's now top of mind for them and they start mentioning it to customers directly?
Yeah, look, I mean, I originally have a marketing background, so I absolutely understand the power of brand and how important it is to get foot traffic into the store asking for the products. However, it's much harder to gain the trust of a health professional to actually recommend and endorse the product. So that's where we focus a lot of our attention to make sure if someone's coming in asking for a probiotic or filling a prescription for a mental health drug, that the pharmacist is actively recommending our product, because that's the hardest thing to do. Then with our marketing, a lot of it is large brand awareness. So while we don't do a lot of product advertising, we do a lot of brand advertising to make sure people are aware of the Activated Probiotics brand. So for example, we do sponsor the Hawthorn Football Club. Apologies for those who go for another team. I go for the Bombers, so it's a bit unfortunate to sponsor the Hawks, but we got a great deal, and in that deal comes with a lot of high value marketing assets that come down from the AFL. So we get branding around, the MCG and other stadiums around Australia, AFL grounds, in front of 50, 60, 70, 100,000 crowd and TV audience. We do a lot of brand collaborations, and we do work a lot in social media and influencers. However, we don't do we don't do bikini girls on the beach. We deal with health professionals who have significant following of people that really listen to what their interests are when it comes to recommendation of products. So that'd be, famous doctors, naturopaths, nutritionists that will endorse our products, and which we never pay them for either. We might give away a product sample from time to time.
And then just in terms of pricing, as you say, it's a premium product. How much consideration goes into, the gap between, if we just take BIOME, Daily Probiotic, the gap of the pricing for that versus, something you're going to get from a Blackmores or a Swiss for, somebody sees that on the shelf, like the kind of sticker price shock. How much goes into that kind of hitting the sweet spot where you can charge the premium without putting people off at the same time?
Much more time than myself and my CFO would like to put into it, but pricing is a big part of our business, whether it's coming to raw materials or all the way through to the consumer. So we're premium but affordable, so $35 to $60 is our price range. What's interesting feedback is we do best in lower socioeconomic or developing suburbs. So interestingly, people with lower income still have disposable income. So, 2-income families, maybe it's a teacher and a tradie, will go to the pharmacy and they'll buy 2 of our products every month. So it doesn't require people to come from the eastern suburbs of Sydney or Toorak to want to buy our product. We do really satisfy the needs and the price point of all consumer segments when it comes to, income background. But yes, we are a lot higher than a Blackmores or a Swiss generic product, but we don't compete with them because we sit in a special area in the pharmacy. We sit behind the pharmacist. So we have that man or the woman with the white coat standing right in front of our product. You cannot reach over and grab it. So the vitamin products from Swiss and Blackmores are seen as a generic FMCG product that's in the supermarket, whereas ours are professional, high grade, clinically proven lines that come from the pharmacist. So our products are seen more like a natural drug, and they get handed to the patient from the pharmacist themselves. So that does eliminate a lot of the problems with price that other people would have if they were sitting on the retail shelf, which we don't. And we are still, within range. So a lot of the competitor probiotic products that are more generic would sort of sit in that high 20s to low 30 range, up to about 40 or 50 at the top end, whereas we start at 35 up to 60. So it is a just noticeable difference at our entry level products, and then our really premium products are specialized and don't have any competition or other products that they could be swapped out for.
I know your phone is ringing there, but if I can squeeze in one final question. What is there scope for the health insurers to subsidize or pay for some of this, either from a preventative wellness point of view or for the acne mental health ones, where it's managing an ongoing condition? Have you had discussions around that as yet?
Look, I've got to be a bit careful what I say ahead of releasing news to market, but we are always working on how can we better use our clinical trials to leverage more support from professional organisations and government organisations, including the PBS. So it's no secret that we do look to the future of the PBS and having things on the rebate scheme. So part of the reason why we do our research is for those future potential drug application opportunities. So while I'm not going to mention any specific products, that is absolutely on the horizon.
Okay. Blair, I'm not going to take up any more of your time. We've already gone over. Thank you so much for joining us today. We look forward to keeping an eye on the BIOME story over the next couple of months.
Absolute pleasure. Thank you for your time today.